again, I'm not being political here, but for the people who criticize the current administration for its energy policies, the U.S. has never produced more oil and gas than we have under this president. It's no thanks to him. Don't get me wrong, but you can't say that that Biden or his party's policies have been in any way a restriction because the facts tell you something else. All right, so let's just say that let's say that Trump wins. Okay, what's going to happen different? Nothing at all.
Art Berman has joined me today on the show, top oil expert. Happy to have you on, Art. Thank you so much for coming on.
I appreciate the opportunity, Danny. Nice to be here.
Yeah, it's a pleasure to have you on. And I'd like to remind everyone on the show who's enjoying this content to please hit that subscribe button right there on the side. It's free, doesn't cost you a thing. 85% of the audience who watches this content is still unsubscribed. So if you don't mind helping me out just a tiny bit, just hit that subscribe button. Also, like the video. Art, for those who may not know who you are, this is your maiden voyage on the show, so it's customary to ask you, who is Art Berman? I know, you're widely known in the oil sphere of things, but for the one or two out there who may not know, may have come across you for the first time watching this video, who are you? What is kind of like your origin story into the oil space and into the investment space, et cetera?
Well, sure. So I'm a geologist. I have an undergraduate degree in Middle Eastern history, but decided to get a real job. So I went to graduate school, and when it was time to look for a job, all the companies hiring were in the oil business. I didn't particularly have any bias or even interest in that, but I figured, well, what the heck, I'll try it. And um, here I am 40 some odd years later. Now, oil is hardly the only thing I do. It was for, a good 20 or so years. But once I started consulting about 22, 23 years ago, uh, I broadened out because my clients were interested in a variety of things, and oil became energy, and energy became climate and renewables, and eventually, sort of a lot of my clients were uh, investment funds, and they wanted to know how their portfolio lined up with some of the trends that I was looking at, and whether or not I actually believe some of the claims of companies in their portfolios, etc. So over the years, I've learned a lot more than they taught me in graduate school about money and economics and geopolitics and kind of global politics. What are the forces that are driving the totality of sort of where human society, civilization is at? So it's gotten pretty broad. So with that, I'll just sort of leave it. Everybody can imagine that almost anything is fair game. Not that I necessarily am an expert on it all, but if you're into energy, it's very difficult to stay narrowly focused because, in my professional opinion and experience, energy is the economy, and most investors don't necessarily see it that way, or maybe not haven't thought about it that way. But when you do, it really changes the way that you think about everything. At least it does for me. What sorts of things do you want to invest in? How do you want to understand global trends? I mean, just to give you a brief example, this morning somebody on X um, was responding to something I'd written, and he said, "Well, gosh, I mean, if consumers are hurting from inflation, then why have corporate profits continued to increase?" Well, that was kind of a simplistic question, and But I stepped him through it and said, well, first of all, you got to adjust those corporate profits for inflation. I mean, it's kind of hard to compare a marginal number in 2000 with 2023. But inflation's not the only factor that affects corporate profits. And obviously, for the purpose of this conversation, you sure need to look at where oil price was during all those periods and look at, federal funds rates. And those are just, a few of the derivative factors that might answer this fellow's question. I'm sure I left him more confused than he was when he asked this question. But the simple answer is it's complex. It's really complex. But bottom line is, if you're looking at things like interest rates, rate cuts, inflation, and you're not paying very close attention to what the real price of oil is, I think you're going to miss the point entirely.
Yeah, so let's just start off with that. From a macro standpoint, what do you see out there by way of the economy, the energy markets, from a broad stroke perspective, Art? What's kind of like your take?
My take is that the global economy is on life support and has been for a number of years, certainly in this century. That doesn't mean that I anticipate, that the patient's going to die or anything like that. But basically, I mean, oil prices in real terms are, they go up, they go down, but the cost of energy is a lot higher than it was 20, 25 years ago. And that affects every single thing in the economy because, well, an economy it runs on work. And work is what happens to energy when you try to do anything with it. We hear a lot of people talk about clean energy. That's, ridiculous concept. All energy is clean. I mean, energy is just the potential to do work. It's what happens when you transform it into work that it becomes less clean. But yeah, I mean, we've got an economy that is running on record high energy prices and costs. We like to sometimes in the U.S. congratulate ourselves on, all the new oil that we found. But if you look at, any kind of like producer price indexed cost of drilling, you find that the cost of getting oil out of the ground is like 4 times higher than it was in 2000. Technology, people love it. They seldom look at the fact that, it has a cost. It's expensive. And so, we pride ourselves on volumes, but, we need to look at kind of on net, what kind of returns are we getting? And part of the reason that markets have soured on oil is that oil companies just were giving them lousy returns for a decade or so. So my sense is we got an economy that's living on debt. If energy is the economy, debt is a lien on future energy. And one of the things that I don't think markets have fully digested yet is that if we imagine that we're going to be running on increasing amounts of renewable energy, non-fossil fuel energy, the productivity of that energy is lower. It's not a value judgment of whether renewables are good, bad, or indifferent. It's just a fact. Lower productivity because they're not only intermittent, but they're more diffuse. They don't have as much bang for the buck, if you will. And when a creditor, is asked to put up money for an investment, he's looking at, well, how am I going to get this back? And if the energy that runs the economy is increasingly less productive, that I'm going to be less inclined to lend, or I'm going to lend less, or I'm going to lend at a higher rate. So everyone likes to think that life is simple and interest rates and inflation is due to monetary policy, and if only the Fed would do this, that, or the other, then life would be good again. And the answer to that is, how silly. I mean, the central banks are responding to forces in the economy, not creating them. And when the media and analysts are obsessed with rate cuts, then you know that the economy is sick. If the economy can't be healthy unless we have a rate cut, then as I said, we're on life support of some sort. So that's kind of a rambling answer, but it's not a simple question. So I didn't get to pieces of it, but I'm going to let you reframe it just to make sure that I don't keep talking here for too long.
Yeah. So what is the impact of the Fed funds rate to the cost, to the CapEx spending for, oil drillers, offshore drillers, et cetera? Because over the course of the last decade or so, or probably even longer since the last oil boom, there's just been a drying up of CapEx. And typically how these commodity markets work, it's all cyclical, right? So you have an oversupply driven by, a spike in the prices, incentivizes supply to come online, and then vice versa on the downside. But we've had very low CapEx spending on the oil in the oil side of things. So with the cost of capital being at what it is today, 5.5%, what does that portend to the supply side of the equation? The Fed's trying to fight inflation from the demand side by raising interest rates, but by that same token, it cuts the other way, right? Doesn't it cut the supply side by making it harder to build out like an oil rig that costs like $1 billion or something to that effect?
Well, theoretically, yes, but realistically, no. And so the I hear a lot of I think a misuse of the term underinvestment. Underinvestment according to whom? I mean, oil companies are not a public service. And I hear all sorts of commentators, analysts that, oil companies aren't spending enough. Well, again, this is not a philanthropic venture here. Oil companies, like all public companies, are in business to give returns to their shareholders and investors. So oil companies are doing exactly what oil markets and their investors and shareholders are telling them to do, which is spend less on capital, spend less capital, and give us more margins back. And that's what they're doing. So I can't speculate on, let's just say, just hypothetically, that interest rates go from 5.5 to 2.5%. I don't think we'll see any more drilling. It really doesn't have to do with that. Companies have a lot of cash right now. Their availability to outside credit is terrible. Nobody wants to lend oil companies money, and it's not because they can't make money. It's because the market doesn't. It's shorting energy, basically. I mean, not just oil, but all energy. Why is that? That's a whole nother podcast, conversation we could have. But basically, the way I read it is markets are shorting growth. Markets don't think that growth is a high probability, and so investors are looking for things that can give them a buzz in the near term. And right now, it's tech and specifically AI. It's sort of it's the great hope. I mean, how in the world can something that is vital to life, not just human life, energy, how is it conceivable that can be less than 3% of the S&P
Right.
market cap? I mean, I'm not saying it's wrong. That's what it is.
What
But
has
that
been
says
historically?
something. Hmm? It's been
what's it been at
higher.
historically?
It's been 6 and 7. So it's half, it's half of what it has been. But even at 6 or 7, I mean, 6 or 7. So, I mean, this gets to a whole nother discussion, which is the way that modern economics looks at energy, which is to say it doesn't. Modern economics, neoclassical economics, evolved in a period after World War II in which energy, particularly oil, was cheap and abundant. And so it just wasn't really a factor in all of their elegant equations. And so if you actually, analyze the production equations that modern economists use, energy is a couple of decimal points in some exponent. And so it's relegated to roughly 6% of GDP. But the value of energy is hugely greater. So and again, and I'm not criticizing. I could, but I'm not. I'm not criticizing modern economics. I'm just giving you some perspective on why the market cap of energy is as low as it is and has never been, more than, I don't know. I'm guessing it's never or rarely been more than 7 or 8%. But what I'm really trying to get across here is that, I mean, we just went through a serious energy shortage following Russia's invasion of Ukraine. Oil prices went to levels that we haven't seen since 2006, 7, 8. And yet, where was the rush of investment capital globally into oil and gas? Zilch, wasn't there. Okay, I mean, we have geopolitical events, even as extreme as the Houthis or whoever it really was, attacking the main Saudi Arabian refinery complex in 2019. Oil prices went up a couple of bucks for a day or so and then went right back down to where they were. Uh, Iran attacked Israel. Israel counterattacked Iran. What did that do to oil prices? Almost nothing. Okay, so 20 years ago, 25 years ago, something like any of those events would have spiked the price of oil, 10, 15, $20. And so that reflects a fundamental shift or even phase change in the way that markets think about energy. Not good, not bad, just that's the way it is. And those are the sorts of things that we have to understand. But that has implications. It has serious implications for how we manage our future as a civilization and how we manage our future as individual investors.
Does the fact that the oil market barely moved on all of these occasions that you've mentioned, does that imply that there's a war premium currently slapped on the oil price in a sense that have all these events essentially been priced in? So sitting at $80 a barrel oil, do we have like a $20 premium? Do we have like a, I don't know, $25 premium? Has that already been baked in?
Yeah, we've got about a $5.50 premium as of this week. And we've carried somewhere between, again, I'm just kind of remembering, but 350 to 750 kind of a risk premium, not just war, but risk in general. Risk premium for throughout all this period, and that's what markets do. I mean, it's funny. I mean, whether you're looking at oil, whether you're looking at stocks or whatever, you read the headlines and stocks up because of X,
right?
Oil down because of Y. Well, okay, great. That's not really why, but of course that they got to have a headline, that gives some simplistic.
Nassim Taleb talks about this in his book, The Black Swan. I don't know if you've read it or not. And he basically says like gold spikes to $2,000 as XYZ.
Yeah,
correlation. What
exactly. But what happens, certainly in oil markets, is that when something happens, something that could be a structural change. You mentioned at the beginning something about, well, Chinese demand is, appears to be weaker, or the Chinese economy is weaker. Well, China is a big component of not just oil, but the whole global economy. And so when that first becomes apparent to markets, then a process called price discovery goes on. And analysts like to talk about sentiment. Well, markets are bullish or markets are bearish. Well, okay, fine. But it's really about price discovery. So in oil markets, prices are set by traders. And I think that's true in all markets, really. So something happens and traders want to test. Okay, how far can I push this? The trader typically knows or has a much more substantive view of what's going on than the average Joe, or whoever it is that takes the other side of the trade. So, let's just say there's some geopolitical event. Iran, sends missiles into Israel. Well, there's going to be some guy out there that thinks, okay, World War III is starting. And there's going to be a trader that says, great, I can find some schmo that'll take the long side of a bet that I don't think, is gonna, I think it's gonna evaporate in a week. And but enough people take the other side of that trade and the price goes up. And and that's where you get the headlines. Oil goes up because of Iran strikes on Israel. And they're not wrong. It's just not that simple. Okay. And then you wait a few days and okay, price goes down, not because the strikes are over, but because of concerns about the Chinese economy. Okay, now we're back to normal. and so these price discovery cycles are what test the bands. What are the ranges that oil or natural gas or or electricity or anything are can reasonably trade within. What will the market bear? That's what it is. So my sense is that we live in an energy blind world. That most people don't think very much about energy, nor necessarily, well, they should, but I'm not criticizing them because they don't. I ask most people, where does your energy come from? I don't know. It comes from the wall. Well, that's the electricity part of your energy. Okay. Oh, well, now you're getting too complicated. I don't want to think about that. But most people don't really, it's just not part of their reality. And when we have shocks to the system, like the Ukraine war was a bit of a shock. Certainly back in the 1970s, the oil embargo was a big shock for those that are old enough to remember that. And for a while, people become more conscious of things. Hey, I need to buy a smaller car. I can't afford these big old gas guzzlers. That's what happened in the 1970s. That's gotten more complicated now. But, as soon as things seem to be back to normal, which never happens, the awareness goes away.
Yeah. So, we talked about all these risks so far. What are some of the biggest tail risks that you see regarding the oil price and the economy at the moment?
Well, I think the two biggest risks to both of those subjects are the fragility of the financial system and wars, geopolitics. And back to what I said a bit ago, if energy is the economy, then debt is a lien on future energy. And you said quite perceptively something to the effect of, well, where's the future supply going to come from? And the answer is, we don't know. And in the past, we could probably have always said pretty much the same. We don't know, but we're pretty confident it's out there. We just need to, gut up and start drilling in offshore or deeper water, or, go someplace where we haven't gone before. And the reality is that most of those options in oil and gas have already been exercised. That doesn't mean that there aren't and won't still be uh, discoveries or important discoveries, but volumetrically, they're not going to move the needle very much. We found everything that is, I shouldn't say everything, we found most of what's commercially reasonable to find. And that's somebody's going to come back and criticize me for saying that, but I'm going to say it anyway, because that's kind of the way I see it. And so we've got a financial system that, people talk about printing money. Well, I'm not really sure where those printing presses are. I mean, I think that money is loaned into existence, and that you can't find that notion anywhere in modern economics. I mean, money is a real thing according to modern economics. And a bank lends, and I get, and I invest, and we got this this dual ledger system, and everything works out really nicely, except that supply of money is not fixed, and it isn't printed into existence. It's loaned into existence by banks. So there's no limit to the amount of money that can enter supply, as long as there's somebody to loan it to. Okay, now that creates a huge burden on society, and I'm not I'm nonpartisan as far as my economic theories, but I'm not one who thinks that a balanced budget, or a balanced deficit, trade deficit, is necessarily a good thing. And I've learned enough about economics to understand that there's a kind of an inverse relationship between government spending and private sector equity. And so if the government doesn't spend anything, then the private sector suffers. Basically, the way it works. And if we have no trade deficit, that might look good on paper, but trade is what makes the world run. And a country that has no trade deficit typically doesn't have a very vital economy. I mean, these are just details that these are empirical facts that may not square with economic theory very well, but that seems to be the way it works. And so the financial system is overshot, way overshot. 2008 was a prelude, in my opinion. Look at how much more debt of all, and by the way, I mean, I worry more about private debt or corporate debt than I do government debt. I guess that's, I don't not worry about any, it's not like government debt isn't an issue. Obviously it is. Okay. I'm not an MMT person, although I accept and appreciate some of the aspects of modern monetary theory to some extent. But the bottom line is that in the old days, before World War II, before central banks were a big deal, when we had a wipeout like the Great Depression, we had a wipeout. Everybody that owed, that all creditors just lost all their money, and the new business cycle began, and we at least had a fresh start. The way we run the world today, we never get back to zero. We just keep adding more and more debt and making the creditors whole, who, I'm not going to say they should have been wiped out, but that was the way that things worked historically. So we have this cumulative, aggregate of financial stress They used to get wiped out every time there was a panic. So that's a problem. And I'm not advocating that we should have let everybody fail. I'm just saying that's the way it is. I'm not an economist. So the financial system is hugely fragile, and it exists on trust and faith. And all it takes is a momentary loss of trust and faith, and we're back to 2008. Okay,
Yeah.
so that's a risk. War is, I think it's greatly underrated. Um,
Mm.
I mean, just maybe it was this morning or yesterday evening, I can't remember which. I mean, shipping rates, global shipping rates are 40% higher than they were 6 months ago. Why? Because largely, I mean, again, there's no single reason for anything, but I mean, the Houthis in the Red Sea, I mean, they've been hugely effective at disrupting transit through one of the major trade passages in the world. I saw that the USS Eisenhower returned to Newark over the weekend. They failed. The great US Navy is impotent against a bunch of guys that we don't even know where they are somewhere in Yemen. Okay. They're using drones, and they're using and 9 million barrels of crude oil and petroleum products pass through the Suez Canal every day. And so shipping rates, not just oil, all shipping rates are way up. And the gist of the article was, you think we're getting inflation under control. Well, think again. I mean, if shipping rates are 40% higher, and there's no relief in sight, then if the way the world moves its goods around is higher, then guess what? Prices are going to be higher for everybody until we figure out how to change that. And I don't see that they're, with the Eisenhower back in Norfolk, that didn't work too well. So these are we think about these wars as being something happening way over there. Ukraine, Russia, I mean, those two countries together probably supply more wheat and grain to the world than any other source. Uranium, same kind of deal. The disruption in European energy supply and industrial activity, it isn't better yet. Okay, so these things, they have profound short-term and long-term effects that we just don't really think about very carefully. If it's not in the headlines, okay, and that, again, that's fine. I don't expect everyone to pay attention to current events the way somebody like me or somebody like you. I mean, that's our job. We're supposed to do that. I mean, that's how we keep our jobs. Not everybody does. So I think those are the two biggest ones right there. It's the financial system and geopolitics.
Hey guys, quick pause. Looking for a new stock trading app or simply a place to diversify your capital? With all of the crazy things happening in the world today, maybe it's a good idea not to have your eggs in one basket, whether that be a bank account or a stock brokerage account. This is where Moomoo comes in. I was able to partner with them and secure you guys an exclusive offer for viewers of this channel. Now, if you sign up with them, you get a special 8.1% APY on uninvested cash. And on top of that, 20 free stocks. Yes, it was 15 free stocks, but I've been able to up the ante a little bit, get you an additional 5 stocks here for a grand total of 20 free stocks. So basically, you deposit $100, you get 8 free stocks. And if you deposit $1,000, you get the remaining 12 free stocks for a grand total of 20 free stocks. This offer won't be around for long. It expires on August 31st, so be sure to take advantage of it. Claim the offer. Now, this is an exclusive offer. You're not going to find this on their website, so you've got to click the link down below to redeem it. And with that said, I will let you get back to the video. On the side of war, do you see any path forward where something doesn't go kinetic, let's say in the European theater or in the Middle Eastern theater or in the South China Sea theater? There's even the Korean Peninsula theater now looking to bubble up. what are the odds of one of these theaters going kinetic in your assessment?
Well, kinetic to me means nuclear.
Mm-hmm.
And I mean, I think we are, you know, much at a much higher risk of some sort of nuclear exchange today than any time in my life. And I remember the Cuban Missile Crisis. I mean, I was a kid, but I remember it because it's scary. I was old enough to know this, you know, we might wake up tomorrow and could be, pretty bad. I think the nuclear risk is much greater than most people imagine, and that doesn't mean at all that that we've got nuclear weapons, launching at New York, Los Angeles, Moscow. That's always possible. But I mean, just these so-called tactical weapons that we hear people talk about. I mean,
Right.
you know, has anybody really thought about what the effect of such a tactical exchange would be? Let's just say on the environment.
And just an FYI to the audience, a tactical nuclear weapon would be something that Hiroshima and Nagasaki would be considered tactical nuclear weapons, right? They're what, a few hundred kilotons? Like
Right.
a tactical nuclear weapon is like anything below a 1 megaton explosion, right?
Mm-hmm.
Yeah.
And I mean, even something much smaller than that was just used, maybe not against a city, but just against, some military position. The effect. I mean, forget about for a moment, how that would ripple through the global political system, but just the effect of the particulates. And I don't mean radioactive. I mean, that would be a factor too, but just the particulate material that was put in the atmosphere would have a profound effect on temperature and climate and everything else
Nuclear winter.
for who knows how long. So I mean, these are really profoundly important considerations that, well, we say it's tactical, so it must be small. But as you point out, I mean, talk about how small tactical was to somebody living in Nagasaki.
Yeah.
Is pretty significant. So again, I'm not a doomer or anything like that, but I just don't think we pay very much attention, or we assume that our leaders are wise people. And boy, looking at the evolution of U.S. presidential events over the last 30 days or so, I don't see a lot of wisdom going on there. Either in the candidates changing as they are, or the people that support them or are against them. I mean, I see a bunch of junior high locker room kind of behavior going on, and I don't think that's unique to the United States. So these are the guys that have the nuclear codes. Everyone, think about it.
Yeah, I mean, you compare our elite and our politicians with like Xi Jinping or Vladimir Putin. I mean, it's just two different levels of like comparisons.
Well, it's a scary situation. I'm not sure it's ever been less scary, but we have a much more connected world, and I don't think that humans are getting wiser as we progress. We might be getting smarter,
Mm-hmm.
and maybe that's a scary thing, that our technological capabilities in war are way beyond what they were 50 years ago or even 20 years ago, and yet the quality of decision making and perspective by those who push the buttons, I think, is at best no better, and
Right.
it's probably worse.
Right.
But again, my point here isn't to paint a gloomy picture. It's to create a perspective, and
Yeah.
in my perspective, my world of energy is that all this stuff is connected, and if people just look at the headlines and say, oh, well, the economy's doing great. Well, that's certainly that's one of the messages that I read. And then I pay attention to people who I respect, whose business is economics, and I'm hard pressed to find any of them that agree with those headlines. That's not to say that they think that we're going to go into a depression or necessarily even a recession, but I mean, thoughtful people who know their stuff are very quick to point out what the risks involved are. And of the people, the economists, the hardcore economists that I follow, I can't find one of them that is particularly cheery about where we're going.
Yeah, so you mentioned the election coming up, and I mean, who knows who we're going to have on the ticket come November? We almost had a different GOP nominee a week ago. We will have a different Democratic nominee. We just don't know who it is.
Yeah.
Likely Kamala Harris, but I mean, anything can happen in the next month or so. It's still the DNC. My question to you is, what differences do you see between the two parties, whether it be the GOP or the Democrats, whoever gets into office next? It's TBD. I don't know. We don't even know who's going to be on the ticket yet, et cetera. But in terms of the energy market, I spoke to Doomberg about this, and he kind of alluded to the fact that Republicans historically tended to be bearish the energy market relative to the Democrat because of some of the mismanagement on the supply side that typically happens during Democratic administrations. Do you agree with that, or do you see it differently?
Well, let me go get my mask so that I don't have to be me. I'll be a rooster or something like Doomberg. I mean, I'm kind of on public record. I'm not a big fan of Doomberg's perspective on energy. He knows that. He doesn't like me because I haven't criticized him personally. I've just pointed out that a lot of his energy ideas don't make any sense. But let me just be very clear. There is no difference whatsoever to the energy world who gets elected president. Zero. Absolutely nothing. Well, I shouldn't say absolutely nothing. There are details that matter. But, the kind of crap that I see on television, we need to unlock the unlimited potential of American oil and gas and, get rid of all these regulations. I mean, what a bunch of crap that is. I mean, the United States, we are a second-rate energy power, maybe third-rate. Okay, now it's true, we produce more oil and we produce more gas than anyone else in the world today. But if you look at our reserves, we're not Sandlot, but we're third rate. Okay, our oil reserves are far lower than Russia's, than Saudi Arabia's, and I'm going to leave out Venezuela, and that has an inflated number in there for oil sands that probably are not commercial or won't ever be developed. But just comparing us to to other countries that have real, tangible, proved reserves, ours are respectable for sure, but they're not awesome. Okay, our natural gas supply. I mean, people think, oh, we're the Tarzan or the Godzilla of natural gas. No, we're not. I mean, Russia, Iran, Turkmenistan, Qatar, they got so much more gas proved reserves than we do. It's just not even funny. Okay, I mean, we are, we're the minor leagues. We're the guys that might get called up into the majors if somebody gets hurt. Okay, now I'm not trying to criticize us. I'm trying to give you a realistic perspective. And anyone who says that all we need to do is X, Y, or Z, and we're going to kick ass, we're going to produce more oil and gas than anybody's ever seen before, just doesn't, I mean, don't believe them. It's a lie. Or at best, it's ignorance. Okay. They just don't know. And for the people who and again, I'm not being political here, but for the people who criticize the current administration for its energy policy, the U.S. has never produced more oil and gas than we have under this president. It's no thanks to him. Don't get me wrong, but you can't say that that Biden or his party's policies have been in any way a restriction, because the facts tell you something else. All right, so let's just say that let's say that Trump wins. Okay, what's going to happen different? Nothing at all. He's going to beat his chest and go over and party with the Saudis because he wants to build golf courses over there. And again, I'm not trying to be cynical. That's who the guy is. But he's not gonna he is not gonna change the dynamics. And let's just say that whoever comes into power in the U.S. makes it his number one priority, which will never happen, that we are going to kick ass on oil and gas production. Well, the oil company executives say, no thanks, because that's not what our shareholders are telling us they want. Gets back to what we said before. You can beat your chest all you want, but we've learned our lesson. We grew and grew and grew from 2010 to 2020, and our investors fled. We're not going to let that happen again. We're trying to win them back. And they've told us very clearly what they want to come back if they ever do. Get off of this growth deal. We want returns. We want ROCE. We want dividends. Okay? So, I just think that the politicization of energy is just like everything else. And, in the whole business of renewables, and I'm going to get criticized for this, but I mean, quite honestly, and let me just be clear. I support shifting to something other than fossil fuels over time, because it's clear that fossil fuels, first of all, are not sustainable over time, but they are definitely not good for, forget about climate change, just pollution. Okay. I mean, pollution is a real problem, and you can't pin that on natural cycles of volcanoes or anything. I mean, we got a lot of pollution in our land, our rivers, our oceans, plastics. I mean, there's a whole raft of things that we're doing that are bad for the environment, that are absolutely 100% due to human activity. Again, take climate change off the table. I happen to think that an awful lot of that is our fault too, but I don't want to get into that right now. Okay, but renewables, there is no energy transition. This is is some kind of this is a figment of somebody's imagination. I mean, wind and solar are less than 3% of the world's energy consumption. I'm not saying good, bad, or indifferent. I'm saying that's what it is. Okay, and for the trillions of dollars, and it's probably about 10 trillion that the West at least has spent on renewables in the last 20 years, we got zilch to show for it. Zero. We got a rounding error to zero of what renewables mean, but most importantly, they have done zero to slow the rise of fossil fuel use. They're just adding on top. They're just, we're just increasing our total energy consumption. And that's the problem. As long as we continue to consume more and more energy, we're going to continue to degrade our environment. And a lot of people will say, well, I don't care. I'm not interested. I'm interested in human flourishing. This is Alex Epstein's, ignorant kind of, catcall, if you will. But guess what, folks? We are part of our environment, and our wealth, prosperity, and survival depends on the health of the environment we live in. You don't live in sewage, because that'll hurt you. That'll, if your house is dirty and infected with, with animals and and mold, you're not going to be healthy. Okay, well, we are doing that to our environment. And again, I'm not taking a political position here. It's just an observable fact. All right. So, but renewables are not the solution. They may be part of a solution, but they're sure not a solution yet. And as far as I can see, the Inflation Reduction Act and all of these government policies, this is a fire hose of public money that amounts to the biggest wealth transfer Ponzi scheme that I've seen in my life, second only to Defense Department spending. That's what it is. Okay. And you can write your dirty comments on my Twitter feed or LinkedIn or whatever, but that's what it is. I mean, that's exactly what it is. It's here's a ton of money, whether it's direct money or tax credits or whatever, and whatever stupid idea you've got, vacuum cleaners to pull carbon dioxide out of the air, drilling wells to 40,000 feet to supposedly get geothermal. I mean, all these stupid ideas that have absolutely no chance of scaling to make a difference. Hey, it's like the payroll protection program. If you're giving it out, send some my way. Okay. I mean, that's just what people do. And so we got hundreds of, of billions of dollars, or, to that, I got a cool, I saw some company that's figured out how to, a little device that you can put in the ground and you can screw a light bulb into the ground and, it lights up. Well, how cool is that? But seriously, dude, I mean, do you really think that's going to make a difference? Well,
Yeah, it's
I'll bet
frivolous.
you that company's getting, millions of dollars from the inflation. So again, I'm not trying to be political. I'm just telling it like it is. I mean, we can throw all the money at this that we want, but what we're trying to do is preserve the status quo. And if you like the status quo, then I guess you ought to be happy with that. So if you're conservative, then you ought to cheer the Inflation Reduction Act because it's sending more money towards all the corporate interests that have made money in the past. If you're liberal, you ought to be hating the Inflation Reduction Act for the same reason, sending more money to the corporations that you think are making too much money to begin with. If you're a climate guy, you say, well, this is a big waste of money. We got no returns. We got nothing to show for 20 years of renewables. So, where's the beef? Show me where temperature is declining. Show me where emissions are declining. Show me where any of this is making a difference. And the answer is, so far, it's not. And somebody, and I see these guys, but you're backward looking. Yeah, damn right, I'm backward looking. I look at data. You want to talk about blue sky and apple pie in the future? Well, cool. But and I'm going to put some value on that. I mean, I might put 5 or 10% of my portfolio into something just because it might happen in the future, but I'm not putting 90% in it. So, these are the kinds of things that I think about and the kinds of things that I deal with. But the answer is government is not going to make any difference that I can see on energy supply for Americans or for the world because the leaders are energy blind. They got no clue, and maybe it's okay that they do. They shouldn't. But if you believe that changing a congressman or a president is going to mean that suddenly, the United States is going to be the energy superpower of the world, give me a call because I just think you're dead wrong. There's no evidence to support that at all. That's just, that's what we hope. That's kind of our primitive urge, well, it's got to be better than it is.
Right. Right. Well, Art, fantastic interview. I need to ask you though, I've been asking this for the last several episodes to each and every one of my guests, and that is to recommend a book or two or three, however many you want, that you think would benefit the audience. So if you could recommend a book to the audience or books, what would you recommend?
On energy?
It could be on energy, it could be anything, within the investing, finance, energy sphere, whatever you think is most appropriate.
Yeah, well, I suppose that I would recommend on energy per se anything that Václav Smil has written. Smil, S-M-I-L. He's an emeritus professor at the University of Manitoba in Canada, and any one of his books on energy will, I think, transform the average person's view of what energy is about, and it's just facts. I mean, it's all about facts. And you mentioned Taleb, and so kind of more in that vein. I am become a huge fan of Ian McGilchrist, and McGilchrist is not a quant like Taleb is, but he's written a number of books. The shortest one is called the Master and the Emissary, and you can get it on audiobooks. And I mean, if you want to understand what human behavior is really about, and if you're an investor, I think you should. I just can't say enough about. I mean, I think he and Nicholas Taleb are probably the two people that have most transformed, how you would somehow apply what we've learned about the way people think and invest to the real world.
Yeah, I have three of Taleb's books right there. You probably, I don't know if you can see them or not. Black Swan, Skin in the Game, and what's it called? Um, what's the last one called? I forget.
I can't remember right
Yeah,
offhand.
Fooled by Randomness. I have that one too. But anywho, we'll have all those linked down below, guys, if you're interested. Also, Art. So I've been opening the door for each of my guests to ask a question to my next guest. So I'd
Uh,
like to open the same door to you. If you could ask a question to my next guest, what would it be?
I get to know who it is.
Yeah, it's Don Durrett. He's a big precious metals analyst and speaker.
Okay. Yeah. I guess my question to any of your guests, including Don Durrett, is I'd like you to put the sacred cows of um, technology and human ingenuity into context for me. Quantify them.
Okay.
Tell me exactly how much either of those has actually added to um, to the productivity of the U.S. or the world economy. My question.
Okay. So define the true value of human ingenuity and growth.
Yeah, I mean that seems like the holy grail.
Hmm.
All we need to do is use our great technology and our wonderful ingenuity, and we can figure out anything. And I'm certainly not one to diminish or criticize either of those factors, but as an energy person, I find them to be sort of the renewables of the energy transition. That they're add-ons. Those are the stowaways on a giant super tanker that think that they're determining the direction of the ship, and they're completely unaware of the gigantic diesel engines that are actually powering the voyage. That's my view. So that's in no way a criticism of technology or innovation, but my research has shown that it is substantially less important than most people think.
I see. So my last question for my last guest to you was from Kevin Wadsworth from North Star Bat Charts.
What is your ultimate target for the gold price, and when do you think it will achieve that? Uh,
Gotcha.
so I mentioned Bitcoin because, of course, there are many people out there who believe Bitcoin is taking the crown from gold and is going to be the the go-to safe haven?
Bitcoin and gold.
Mm-hmm.
Yeah, well, that is a bit out of my normal scope. But I will say that since both of those figure hugely into the currency conversation, I am very hard pressed to get on the bandwagon of the notion that that we are moving away from uh, the U.S. dollar, euro dollar system. I'm happy to acknowledge that there is some momentum in that direction, but I just don't see how global transactions occur um, at scale using gold or Bitcoin. Now, if people like them as personal investments, I'm all for it. And I think there are a lot of very positive things. I mean, Bitcoin, I think, is hugely empowering to people who live in countries where they can't trust their governments to, to leave their bank accounts alone, or even to give them bank accounts. I mean, I see that as an important force in in the developing world in the global South. Gold, I'm confident that gold is a crucial aspect of everyone's investment portfolio. But I guess I just don't see where either of those are changing the fundamental way that the economy works. As a hedge, fine.
Gotcha. Well, Art, any concluding thoughts before you wrap things up?
Concluding thoughts are that the world, the people in the world, I think, need to get used to the idea that we're going to have less energy to use in the future and that it's going to be more expensive. And for all the ups and downs in oil prices and oil markets, I see no way that oil prices will not continue to increase secularly. Forget about this month or next year or this quarter. They're going to continue getting more expensive, and that's going to affect the way that we get our money, spend our money, and invest our money. The future probably never looks like the present or the past. Multiply by 10 right now, and be very, very cautious about who you listen to and who you believe.
Great piece of advice, especially nowadays. We kind of live in the age of deceit, especially with getting imprisoned within your own algorithmic silo, right? Everyone thinks they're living in the true reality, but they're kind of like siloed into whatever the algorithm is feeding them. So they're kind of into a bubble there.
People are only interested in their own view of reality. That seems to be an observable truth.
Yeah, and the platforms reinforce it, so they just keep feeding you that reality over and over again.
Right.
Well, fantastic. Where can people find you, Art?
Danny, you can find me at artburman.com. You can find me on X or Twitter at AEBurman12. I'm on LinkedIn. I'm on Facebook. Google me. You'll if you do, you'll get a lot of people criticizing me, but maybe that's a good reason to pay attention to what I have to say. Not everybody does. What I say, as you can imagine from the content of this discussion, is not mainstream, but it's not opinion either. I can and do support all these views with a mountain of data, which if you look at my website, 100% free. There are no ads. You might have to register, just like you mentioned in the beginning. You have to subscribe. Doesn't cost me anything. Doesn't get you any crap in the mail, in the email. But there's a world of information out there. I got a post on exactly the question I asked for all your future guests on, how much is technology and human ingenuity added to productivity of the economy. So artberman.com.
Fantastic. We'll have the links to all of those down below, guys. Be sure to check it out. And again, like the video, subscribe to the channel, and comment. Go Art Go in the comment section if you enjoyed this video. If you disagree with any points, let me know down below. Really interested to get your thoughts. And with that said, I will see you in the next episode. Bye, y'all.